Yeah.
All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. How is everybody doing today? Welcome into the stream. We do have some important developments happening on Bitcoin here on the crypto markets. And so I thought I'd go live and we could just explore the price action together and see what is going to happen for Bitcoin. So welcome in. Thank you, everybody. Looks like my streaming software is not giving me my chat. So I'm going to have to kind of read the chat off of a screen from my phone. So I'm going to have a bit of a delay on your chat messages here, but I will try to do my best here to cover the chat. So welcome in, everybody. Thank you for coming. Many of you were just here from the Jason Casper Discord stream, and some of this I do want to cover again, the review that I just had from the Jason Casper stream. So sorry for that, guys. You guys just went through this with me, but I do think it's important, and I do want to show it to the rest of the community here on YouTube as well. So, okay, guys, Bitcoin is been forming a range here for the past few days. We are hitting the macro value area high of our range. So let me actually go ahead. We'll start out on the more macro price action here. Let me get rid of some things. And let's turn that on. Okay, let's zoom out to the daily chart and let's look at the daily chart here. So Bitcoin has been in this bigger overall macro range since November, 5-6 months now. Bitcoin has been in this big macro range. Now, we did hit the bottom of the pitchfork and saw a very, very nice bounce from the bottom of our pitchfork band and had a nice impulse to the upside, almost up to our all-time highs already. Flipped the midline to support, held above the midline. We are continuing this push higher and higher and higher. Get rid of that guy. And Bitcoin is stalling out now, and we are stalling out at a very, very key level on Bitcoin. It is the value area high of our macro range. So anytime you see a range deviation like this deviation here, I would even call this a breakdown. We just broke down in the range. We found a new fair value in this lower area. Then we were able to break back into our prior fair value, which was this upper area here. I call this area up above the all-time high range, this kind of area here. Now that we are back within that area, we can combine the two ranges together to form, this was our lower range, this was our upper range. We can combine the two ranges together to form one much larger range on Bitcoin. And right now the market is trying to establish the fair value of Bitcoin within this range. So anytime Bitcoin's fair value gets to about the 89K area of price, it is considered undervalued. And anytime we get up to this 105K area of price, it is considered overvalued. And the fair value for Bitcoin right now, the current past 6 months, is about 96, 97K. And so Bitcoin is just ranging within this range, trying to discover its new fair value. I do want to talk about something here with Bitcoin. So in this big impulse up that we've seen, there's a couple things where there was really two major areas where we could have been expecting a pullback. We could have been expecting a pullback from that point of control where we had the most resistance, the most confluence of resistance on the chart. We had a monthly naked point of control there. We had a weekly level, a daily level, daily naked points of control, our large range point of control. We had a golden pocket from the all-time high down to our lows. Our macro golden pocket was in that area. We just had a lot of confluence for resistance in that area. We only got a small pullback. We didn't even break market structure. We didn't even break our local lows, and we continued to impulse up through that area. Now, we were looking at this as we were coming up into this area. We were looking at two options. The bearish option was an A, B, C up into this area where we could complete our C wave and then we would see a dump, or we were looking at a 5-wave impulse, which looks like that's what turned out to happen. A 1, 2, 3, 4, 5. Now, any of you guys that are Elliott wave guys out there know that the market usually moves in series of threes and fives is what we call it, 3s and 5s, impulses and corrective moves. We have potentially just finished our 5th wave at the value area high at a key resistance area on Bitcoin with bearish divergence on the charts. You can see that was a horrible drawing, but lower highs on the momentum waves, money flow topping out, coming down. And if we look at NAMI, not only a local drive of bear div, but more regional drives of bear div on the daily. Also, we have money flow bearish divergence, lower lows on the money flow, higher highs on the price action. So we are seeing some higher time frame warning signs of the bigger pullback from the value area high of this range, according to our 2 indicators here. Also, something that we expect maybe a pullback from this area is because we have finally seen our 5-wave impulse now, and it could be potentially completed up at this key resistance area. And after an impulse completes, what do we expect? We expect a bigger, deeper correction to the downside. This is something that we need to be watching for. With our bearish signals confirmed on the chart, I am concerned that this could happen. So let's go. Oh, music's too loud. Thank you, CMX. Thank you. Okay. All right. Hopefully that's better for you guys. Let me know if that's better. Yeah, Andrew, that's true, buddy. That's true, Andrew. Okay. We'll look at BTC dominance. We'll look at all that stuff. I'm sorry, guys. I did not realize the music was too loud. Did you guys understand what I was saying just there? Let's see. Okay. Sorry, guys. Yep. Okay, let me know in the chat if the music is okay now. And I guess I can cover again, 20% music fine. Okay. Okay, you were barely able to hear that. Okay, guys, I'm just going to go over that again real quickly here. So Bitcoin is in a macro range. We were in a all-time high range, which was this range above here. And then we were in a lower range, which was this range down there. You know, after the chaos of the tariffs and all the scare and uncertainty in markets, Bitcoin broke its fair value down in a distribution, and we were forming a lower fair value in this area. Now, after those fears and uncertainty calmed down a bit, Bitcoin was able to break back within its fair value for Bitcoin, or within its value area for Bitcoin, reestablish price action within that value area. And at that time, the strongest resistance on the charts was that point of control level. We had a lot of confluence up there. We had naked monthly point of controls. We had weekly levels. We had daily levels. We had our macro golden pocket, which was pulled from the all-time high down to our lows. And this was our area. If it was going to be a bearish relief rally and a corrective move to the upside, our most probable area to get a rejection was from this area at the point of control. We were looking at 2 potential scenarios, an A, B, C, a 3-wave corrective move up to that area, where then we reject, creating an overall macro lower high and continuing the push down. Or our bullish scenario was looking for a 5-wave impulse to the upside. Well, that's looks like what we got there. A 3, 4, 5. We got our 5-wave impulse. So oftentimes Elliotticians talk about the market moves in series of 5s and 3s. And what that means is that we either move an impulsive price action or corrective price action. And we have seen the potential end of our 5-wave impulse up here. Now, if this is the end of our 5-wave impulse, it makes sense as far as our resistance, because it's the value area high of our range of the past 5 or 6 months. So if we are just going to continue to range and find the fair value for Bitcoin, it is considered overvalued when it's near or at the value area high. it is considered undervalued when it's at the value area low, and it is considered fair valued at the point of control. So we are in the overvalued area. The 5-wave impulse has potentially completed, and we could be expecting a bigger pullback from this area. I was talking about this in yesterday's video. I do think we could see a bit of a range that forms up in this area for maybe a week or even 2 weeks, or at least through the weekend here. But we could be expecting a bigger pullback. And I want to go into why we could be expecting a bigger pullback here. So first off, let's go ahead and hide this range on the chart. Let's clean up this chart a bit here. And let's talk about that Fibonacci pull. So from the lows, or from the all-time high to the lows, you can see that, let me get that right on there. Okay, golden pocket was coming in around that point of control. We broke that golden pocket. We pushed up all the way to the 0.886. And let me make that a different color so you guys can see that better. So you can see the value, the 886 is right at our value area high of the range. I have the value area high marked out in this white line. And let me hide this to clean up the chart. Okay, and let me hide this as well. So we've hit our 0.886 and we've hit our value area high, and we are seeing resistance form from this area. Now, when you hit the 886 in a larger trending move, it does give you a higher probability to eventually come take out the highs that fib was pulled from, or if it was a bearish retrace the lows. But in this case, it's going to be giving us a higher probability to eventually come take out the all-time highs of this range. So that could be seen as a bullish signal. Even if we reject here, we should be looking for a higher low on the charts to find support at a higher low and then continue to break up to new all-time highs. So overall, on a more macro time frame, Bitcoin is bullish, more bullish, and we should expect more all-time highs to be coming in, new all-time highs. But in the recent history of Bitcoin, the recent price action in history of Bitcoin, just going back to the range that we saw last year, 2024's range, Bitcoin's range in 2024. This was a reaccumulation range where we did see a few things that are unusual happen in this range. So I want to go into this here and talk about these 886 touches. So if we look at this 2024 range and we do a Fibonacci pull from the highs of the move to our first major lows, where did we reject? We rejected from the 886 Fibonacci. And in this case, we did not eventually come take out the highs. We actually dropped and made new lows. So that is one time in a rangy, larger range price action where Bitcoin did see a major rejection from the 886 and got a major drop. Now, if we do that same Fibonacci pull from the highs again to the next major lows, you can see that Bitcoin once again came up to the 886, rejected the 886, and instead of making a higher low and coming to take out the highs, Bitcoin continued to drop and made new lows below our prior lows, confirming 2 times within a range in our most recent daily accumulation range, reaccumulation range, that it did not take out the all-time highs after an 886. Now let's go again. Let's take a new Fibonacci from our highs that were our new highs down to our lows of the last major daily crash. Let's look at the 886 again. Hit the 886 a third time, rejected from the 886 and came down and made new lows rather than taking out our local highs from that Fibonacci was pulled from. So it does seem like Bitcoin does like to reject on major daily ranges from 886 fib touches and see big moves to the downside. Well, what just happened just now on our big daily range, our next big daily range? We just hit the 886 with confirmed high time frame bearish signals on the chart. Do we not come out, not make a higher low, not come eventually take out these highs? Do we see a crash to take out the lows at 74K? I'm not saying we are going to. I'm saying we need to keep it in mind as traders based off recent price action and recent historical things that have happened with Bitcoin. So there is a possibility that this could happen. Now, I also want to talk about this range up here. This range was what I was calling the all-time high range before we broke it down. And if you guys go on my YouTube channel, and I think it was in December, somewhere, yeah, maybe January, we were looking at this range and it looked like it was starting to be a distribution range. We were at the top of a major cycle channel. You know, at the top, let's zoom out onto the weekly chart. We were at the top of this major bull market based weekly cycle channel. And we saw confirmed bear divs, not only on the weekly, but also on the daily, multiple drives on the daily. And at the top of the channel, we could expect some consolidation and maybe a distribution pattern where we break down. We did break down from that fair value on Bitcoin in that area. So let's go back to the daily chart. And what I want to show you guys here is, how did I know when I made that video a few months ago, I was leaning towards this being distribution rather than reaccumulation? And how did I come to that conclusion? Well, I used my trusty indicators in Market Cipher B and now NAMI. I did not have NAMI back then, but I was looking at Market Cipher B here. And as we were coming and forming this range, first of all, we were having higher highs coming into the range, lower highs on the momentum waves, confirming bear divs. Then we made another high, confirmed another drive of bear div on high time frames. But this is the most important part. Our money flow since the very start of that range was starting to drain out of the asset and come to the downside, telling me that with our confirmed multiple signs of bearish signals on the chart, that this range here was more likely to be a distribution range where we break it to the downside rather than reaccumulation where we continue to pump. Also, another hint and signal that I got that this was maybe going to be a distribution where we broke down was, if we go onto our weekly chart and we look at in terms of Elliott waves, we look at our Elliott wave impulses. We can see, let me get rid of this here. We can see on the chart, we have a very clear 5-wave impulse to the upside on the weekly from the bear market lows. We have our wave 1 here, our wave 2, our wave 3 being your strongest, longest, most powerful wave, most commonly, your wave 4, and then your wave 5 hitting up into this new all-time highs. But after a very clear 5-wave impulse, you are expecting some sort of corrective move. And so knowing that in this range, when we kept tapping the 886 and rejecting and making new lows, eventually we knew this range was more likely to break to the upside because our big weekly impulse did not see 5 waves in it yet. It was not complete. So our bias was for more upside overall. Now that we have finished the 5 waves and now made new lows, breaking these prior range lows around 91K, 93K, we could say this 5th wave is complete here. And maybe we are going to expect a correction over the next few months here on Bitcoin. So there's a few types of corrections we can look at. We can look at a B flat, where your B wave actually pierces the all-time highs, takes out the all-time highs, and then you drop to take out your lows of A in a flat correction here. That is one scenario. And actually, that's a pretty bullish scenario. If Bitcoin only drops now after taking out the all-time highs down to 70K to hit that macro golden pocket, and then we rally again, that would be a really nice thing to see for Bitcoin. But I'm getting a little bit off topic here. So let me go ahead and zoom back into the daily chart. Let's look at this range that we saw, this daily range that we saw right up in this area, what I call the all-time high range. So let's get rid of this impulse here. And what I want to show you guys is, it almost looks like a what is happening here could be a fractal of what's happening right now on lower time frames. So I'm just going to grab our bars pattern and I'm just going to pull this range here. And we're going to take this range. I'm going to just shrink it up a bit to make it on lower time frames. And we are going to bring it up into this area. And now we're going to zoom in onto the 1-hour chart. Now, remember, we are at the top of a daily impulse, possibly completing 5 waves of that daily impulse. So what we could be looking for is something very similar to what we're seeing here. Stretch this a bit, put this in this area, and we could be looking at a very similar fractal to what we're seeing here. I know that's not perfect, guys, but it's not going to look exactly the same. But we are seeing something very similar to this, where Bitcoin is starting to form what looks like could be a distribution range up in this area around the value area high. After, on the daily time frame, if we zoom into our daily time frame, we do see a pretty clear 5-wave move up here. I'm just not making this perfect, but I'm just throwing that on there. So daily 5-wave move up. At the end of the 5th wave, we do expect a corrective type of move. We are at the value area high of our range. Do we see a distribution pattern play out where we could drop? Now, if we do, because we hit the 886, it does give us a higher probability to take out the all-time highs. We should be looking for, if we get a deeper corrective move, we could be looking for the golden pocket, which often retraces to in an ABC correction after an impulse. You could get a move down to the golden pocket where this would be a really good opportunity for a swing long to take up to much higher prices here. So that would be an area I'm looking to swing long. We do have to be aware it could break down and not find support just like these guys did in here. But as far as historical price action, it didn't happen, recent historical price action. But overall, probability-wise, we would be expecting a higher low to come in on the charts on more macro timeframes and continuation up to new all-time highs. So Bitcoin is looking like it could be forming a distribution range in this area. If we zoom into the 1-hour chart, actually, let me get that there. And then let's zoom into the 1-hour chart. So let's look at this. Let's look at comparing our last daily range. What were the signals that gave us a hint that it could be distribution rather than reaccumulation? Well, in our last daily range, we were making these highs just like in an ascending channel, just like on the daily time frame. We were seeing bear divs come in on the chart, okay? Bear divs coming in on the chart. We were seeing our money flow topping out at the beginning of the range, and we were seeing money flow drain out of the asset as the range was forming. Well, multiple drives of bear div, money flow topping out early into the range and draining out of the asset, bear divs on multiple time frames here. This looks very, very similar, a smaller fractal of what happened earlier in this all-time high range above us. So we do have to be aware that this does give us maybe an idea that, yes, we are going to see a distribution pattern up in this area and that we could break down, forming that bigger corrective move to the downside. I still would like Bitcoin to range a little bit longer in this area. We are going into the weekend, so it would be nice to range throughout the weekend. And then maybe next Monday, we could either see the breakdown or a break out of this range up to the upside. But I just want to put this on your guys' radars. As traders, we map out both scenarios. We map out the bullish scenarios, we map out the bearish scenarios, and we map out our levels of confluence of support on our levels of confluence of resistance, and we let the price action come to us. If it comes to our areas of interest and we see confirmations on our indicators or whatever you use to take the trade, you take the trade. If you do not have confirmation, you wait for your next level. So just as a trader, we need to be aware of both scenarios. Okay, let me check the chat here, see what you guys are all saying, and I will say welcome in everybody. Let's see here. Sorry, guys. I need to just scroll back a little bit here. Yes, Jack, I just repeated what I was saying, so. Okay. Yeah, I'm sorry about the music, guys. I'm really sorry about the music. It's okay now, though, right? Like, the music's okay now? Heard something about Bitcoin, yeah. Okay. ZMX, thank you, bro. And hey, thank you so much for DMing me and letting me know that music was too loud. It was your comment that helped me fix that. Yeah, money flow is the best indicator, Mickey. I agree. Money flow's great. Little Wong Dog, it is possible to go below 74K. We do have a scenario where we could see a flat correction where we take out the all-time highs, see either an SFP of the all-time highs or what we call a failed auction type price action of the all-time highs, and then come down to take out 74K. And remember, right below us, right below that 74K area, we have that macro golden pocket, which it did not get hit. So if we look at this price action going from our last major daily lows to our all-time high, we have that golden pocket that was front run at 72K. Now, also, what else do we have at 72K? Well, this prior range that I was just talking about with you guys, this was our 2024 reaccumulation range. If we look at this range, the value area high of that range is in that golden pocket area. You can see right around 70K. So it is possible that if we see an ABC correction, which could look something like this whole push down was an A wave, looks more correct. You could probably count an impulse in here. Our B wave coming up to take out the all-time highs, and then see a C wave to take out the lows of A. Now, if you zoom in on lower time frames, generally you want to see a 5-3-5. So you want to see a 5-wave impulse down in A. You want to see a 3-wave corrective move in B, and then you want to see another 5-wave impulse down in C. The only problem with this is this B wave does look more impulsive rather than corrective. But I'm going to keep it on the chart as a scenario. We do need to watch for it, especially the way we pumped, guys. The way we pumped since 74K is very, very unhealthy. I actually want to talk about this for a second. So let's go on to the 4-hour chart. Let me delete some of these things here. And since our lows, first of all, we started it out kind of crappy by making this double bottom, but not taking the liquidity down here. If we would have just swept a little bit lower and swept this liquidity, it would have been really nice to get that fuel to move to the upside and a healthy move to the upside. So the market makers are stopping out all the early longers, and then they push up. But that didn't happen. We got a front run of that level. Then when we were in this range here for a couple weeks, it is a flat correction. We were looking for the drop down to 83K to take out our range lows at 83K. Before continuing, so like an SFP of 83K, before continuing the impulse to the upside. Well, you can see we almost made a double bottom here, but we did not take out that liquidity, and we let all these longs stay intact. We let all these longs that longed in here stay intact, and then we continued the impulse to the upside. So right there, that's unhealthy as far as grabbing liquidity and seeing healthy moves. Then when we were up in the ascending channel, we were in this bigger ascending channel here on Bitcoin. Actually, hold on, let me grab this. We were in this bigger ascending channel here on Bitcoin, right in this area, and we were expecting a potential breakdown of this channel. Well, we did break the channel down, but we did not grab the lows of this range. You could call this a range here, this kind of flat type price action here, a range. We did not grab any of the liquidity of that range before continuing impulse to the upside. So overall, we have built up a lot of liquidity that is still intact in this area here. And that does mean that if we do finally start to break market structure bearishly and move to the downside, we could see a liquidation cascade event where we do see all of these longs that have been in place and still have their stop longs in place, or they're in high leverage positions. They could get liquidated or stopped out. So we do need to be aware that this move up has been relatively unhealthy so far. Okay, let me continue checking the chat here. Yeah, you guys, I'm going to try to cover some altcoins. So let me finish with Bitcoin real quick here. We're pretty much done with Bitcoin, but let's, yeah, okay, first off, guys, if you do get anything out of this video, will you please hit the like button? Because I'm trying to grow the channel. I'm trying to get more out there. So if you guys learn anything from here or get any insights on the market at all, will you please hit the like button? Also, I do have a couple sponsors of the channel. I have BYDFI Exchange. They are a non-KYC and non-VPN exchange where I am partnered with them. If you do deposit your first initial deposit, you get up to 15% bonus cash back on your first initial deposit. No VPN required, no KYC required. They are also offering up to 15% trading fees off a level 1 VIP account. So you can see here, you can get up to 15% discounts on 17% discounts on trading fees. And also they have higher VIP levels depending on how much you deposit here. You can actually get up to 45% discount on trading fees if you are a whale and you deposit and get you can get very good trading fees on your account here. So that's BYDFI Exchange. The link is in the description in the comments. And then the other partner of the channel is MEXC. MEXC is offering 10% cash back on your initial deposit, and you can get up to $20,000 in futures trading bonuses, depending on how much you trade how much volume you move in futures trading. So both those links are in the description. And our third link in the description is of this lower indicator here called NAMI. NAMI is a paid indicator, but it's very similar. It's a momentum and money flow based indicator. Very, very good. It gives very, very good hidden bullish signals. Actually, look at this signal that it just gave here. Higher lows on the price action, lower lows on the momentum waves. It just printed a hidden bull div on the low that we just made. And now, since that low, we are pushing up here again. So, really, I love NAMI for hidden bull divs. Like since using NAMI, hidden bear and hidden bull divs are NAMI's specialty, and they really, really work well. And then if you compare those with Market Cipher, you're kind of unstoppable. So those are the links in the description. They're there for you if you guys want them. Let's go ahead and zoom in on the lower time frame price action now, and let's just look at this range that we've been creating. See, is the music still too loud, guys? Okay, let me know in the chat if the music is too loud. I can turn it down even a little bit more. Or I can just turn it off. There we go. Okay. Yes, and also, guys, on NAMI, the indicator down below, this NAMI indicator, for a limited time, I do have a 50% off discount code on NAMI. So that's the highest discount he gives. Really, really good discount code. Divine50 is the discount code, and the link is in the description, and the discount code is in the description in the below. So if you guys are interested in that, that is there for you. Okay, you can't hear the music. I just turned the music. I just turned it off, guys. If you want it back on, let me know. I'm just going to leave it for now. There is no more music. Okay, I guess I just turned it down too low. Yeah, it is odd that we did not grab any liquidity, right? It's very odd, Caleb. But Bitcoin, when Bitcoin, the sentiment changes on Bitcoin, we know Bitcoin really does, sentiment is super important for Bitcoin. So when sentiment is bad, it dumps hard. But when sentiment is good, it's a rocket. All right, let's go into this lower time frame range that we are seeing here. And let me go ahead and turn on a channel that I've been watching. So I've been watching this channel just based off these first two highs. At first, if you guys were watching my YouTube channel from a few days ago, we had this channel here we were trading in. We broke it to the downside. We had our first rejection from the golden pocket and the point of control in this area. Or I don't know if it was point of control. It was golden pocket and the bearish retest of that channel. Had a small drop to the VWAP, was able to hold the VWAP, and we busted up to the 786. Now, in this, and then when that happened, I changed the channel. So I just took this channel, I put it down. Yesterday it was at those lows, and now I put it down to where it should have been. The ultimate lows is kind of where you want to keep the channel. And you can see we're kind of bouncing from the bottom of the channel overnight and this morning here. But what I do want to say is in this structure here, we have broken market structure bearishly on some time frames. So if we were looking at this ascending channel, that first ascending channel, we hit into the top of the channel, we hit the 886, we hit the macro value area high. We saw a rejection from that area, and this was our lows, kind of in this area here was our lows. And we did break our market structure. All of this was higher highs, higher lows, higher highs, higher lows, all in through here. We broke that structure to the downside, making our first lower low, making our first break in structure of this area. So I can put the MS break there. We broke MS. So now that we broke market structure bearishly, we could be looking for a lower high to come in on the charts, where then that could be this initial push down to be a wave one. This could be a wave two, and then we could see a big breakdown in a wave three and starting an impulse to the downside, or just continuing to form complex corrections in here. But we need to pay attention to bearish market structure breaks. So after breaking market structure bearishly, we look at the golden pocket 786 area for resistance to put in a lower high. If we go ahead and pull that Fibonacci on the charts, we go from the highs to the lows, and we look at that 786, you can see that we did reject from that general area. We did wick a bit past it, but in general, we rejected from that 786 area. We did not hit the 886, which is the important part. Because if we hit this 886, then we have a higher probability to come take out this high sooner rather than later. But we did reject from that 786 area, and we did see kind of a move down. We are still ranging overall within this sideways range. So if we take our volume profile and we just measure this range, you can see we are still in this sideways range, and we are just kind of chopping and ranging, which we did expect at this value area high. We don't expect to see a straight move up to, we don't expect to see a straight move up to it and then a straight rejection like that. It very rarely happens like that. What usually happens is you come up to it, you usually grind up to it, range for a bit, form a distribution pattern, and then dump. And that's what we should be looking for. And this range could even last a couple weeks here. But Bitcoin is still trading within this ascending channel. One of the things that we did earlier today is, and I talked about this in yesterday's video, we were looking at just playing the range until it breaks, right? So we had our range highs, the value area high. We also had a golden pocket in that area, and we had the daily level. Now I deleted that daily level just on the prior stream, but if we go ahead and zoom out onto the daily, and let's just mark that out real quick. Let's go mark out that daily. And you can see, where did we reject earlier today? We came right up to that box of resistance, that daily level, and it was also the value area high of our range, and we rejected from that area. Now, I did long earlier today on Bitcoin once we reclaimed the channel, and the channel was a bit higher, so like it was up in this area, and I longed it here, and I took 2/3 of my long position out as soon as we hit that daily. I had a limit TP set there. And then we started dumping. Now, we have not dumped to our golden pocket yet on this range here. And what we could be looking at here, if this is going to be, and look at where our golden pocket's coming in right around the value area low, if this is going to be a wave 1 here, and then we're going to see a wave 2 coming down to your golden pocket in a 3-wave corrective move, and then our big third wave, excuse me, couldn't get that out of there, in the impulse 4-5. You know, if we are going to see a bigger 5-wave impulse here, that could be the start of it. This could be the start of it. I do think with us going into the weekend and with us being at rangy type price action, this could be still a 5-wave impulse, but we could just like top out around the value area high again and then drop again and continue to range. But this is kind of what I'm looking at locally. So yesterday in the video, I gave this as the only local level that I'm looking at shorting. And then I gave this level here as the only local level I'm looking at longing. And we still have not hit that level yet. Let's get that off. Okay, let me check the chat again, see how you guys all are doing. What's up, Mark Dutch? Good to see you here, man. Okay, no music. Music's fine. Okay. I was reading the chats, Dr. X, from 15 minutes ago. I'm a bit behind because my stream software is not picking up my chat, so I'm having to read it off my phone. Let me see if I can get this. This is super annoying, but let's see. Okay, and okay. Yeah, maybe we didn't grab the liquidity because the market makers are going to giga-wreck everyone that's holding. That's true. Yep. Quant, it's possible we go to all-time high. But, you know, I'm just looking at probabilities and possibilities. So you can't get mad at looking at different scenarios. If you're a true trader, you should be looking at both scenarios. If you only have your bull glasses on all the time, you're missing out on opportunity in the markets. If you only have your bear glasses on all the time, you're missing out on opportunities on the markets. The job and the goal as a trader is to map out both the levels of resistance and support to the downside and to the upside, and to trade whatever comes if you have confirmation to take it. The job as a trader is to scrape a little bit of money from the markets every day and to build your own portfolio. So if you are only having one bias in mind, it's not ideal as a trader. So of course we're going to look at both scenarios and map out both scenarios so we're ready for it, because in order to be a good trader, you have to plan your trades ahead of time. You have to plan your risk management ahead of time. Well, if you're not looking at both scenarios, you cannot plan and you cannot strategize your risk management. So of course we're going to look at both scenarios. But I do understand what you're saying. We are bullish. Fundamentally, we're bullish on the charts. It looks bullish. We have bullish momentum going. I really understand what you're saying here. It's just as a trader, I do map out both scenarios. First goes the 4 hour to red, then the 8 hour. Yep. And then the daily. Yep. Sudeep, what's up? It's good to see you. Yeah. Okay. Did I freeze? I hope I didn't freeze. Okay. All right, guys, let's go real quickly into Bitcoin dominance. I want to talk about Bitcoin dominance. And also, I want to see if I can find, let me just check something out real quick here. I want to look at my screenshots. Let's see here. Where was it? Is that it? That's not it. Okay. I have a recent picture of Bitcoin dominance. I guess I could just you guys will have to take my word for it. But as we were on, I'm going to go zoom out to the 2 day chart on Bitcoin dominance. And we have been in this ascending channel on Bitcoin dominance for quite a while. So let me get over here. Let me get rid of some of this. And what we have been seeing on Bitcoin dominance is really since March of 2023. So 2 years now, for 2 years, over 2 years now, we have been trending within this ascending channel on Bitcoin dominance. Remember, every one of these candles is a 2 day candle. So for years, we've been trending upwards on Bitcoin dominance. In December, we did see, or no, late November, early December, we did see that one big jump on altcoins against Bitcoin. So we deviated that channel to the downside. But you can see in here, once we deviated that channel to the downside, we were able to break back within that channel, back test that channel locally, back test it again a couple times here, and then we pumped to the top of the channel. Rejected from the top of the channel, came down and chopped around the midline for a few weeks. And then we were coming up. Now, a few weeks ago, I think it was last week, about a week ago, we were in this area here. And I did tell everyone on my YouTube channel, and it was my thumbnail, although I changed my thumbnail later once my thumbnail guy made the thumbnail. I had an arrow here saying, I think Bitcoin dominance is going to come higher. I think we need to continue coming higher until we hit the top of the channel. And then we could see a drop on Bitcoin dominance and we can see alts rally against Bitcoin. Well, what happened? We did continue higher. We hit the top of the channel. We saw a perfect dump on Bitcoin dominance. The altcoins rallied against Bitcoin and we dropped to the midline. Now, yesterday, I talked about this in my video. We were losing that midline. And for the first time, if we zoom in here now, let's go onto like the 4 hour chart. The first time we came down to that channel, we saw a bounce and then we saw another bounce and then we started losing it. So it was looking pretty bearish for Bitcoin or for Bitcoin against the altcoins. Like it looked like altcoins were going to rally. So if you look at my video title, I think it was 2 days ago or 3 days ago, I talked about a rally on altcoins based off of Bitcoin dominance starting to lose the midline. If we start to lose the midline, we could come all the way to the bottom of the channel. But now what it looks like is happening, let's just zoom out onto the 2 day chart again. It looks like Bitcoin is overall holding the midline and we are seeing a push up on Bitcoin dominance from the midline. This is new developing today because even yesterday we were not seeing that. So it looks like Bitcoin maybe is going to continue to rally to the upside. What I would say yet is we really haven't even broke market structure on higher timeframes for Bitcoin dominance. And if Bitcoin dominance does make it up to the top of the channel again, I will be looking to transfer some stuff into altcoins because I expect another dump on Bitcoin dominance, or I expect altcoins to rally. So maybe not transfer, but maybe to look for another rally on altcoins. But Bitcoin dominance overall has just been it's been a beast. Like it is just going and going and going and going. And who knows, maybe in a year, Bitcoin dominance will be at 76% and altcoins will be wrecked. No, I'm just kidding. I don't think that's going to happen, but it does look strong. It does look very strong. And we know the institutions like Bitcoin. This, by the way, this drop that we had was to a much bigger channel midline. So if we zoom out onto the weekly chart and we look at, let me just go ahead and hide this smaller channel, which is not small at all, but this is like going back, till 2017, really. We've been chopping around in this channel and you can see like here, broke above the channel, flipped it to support, continued up here. Now, these highs were made off these pivot points, so I'm not saying it pushed up to the highs because I made the channel based off of those highs and then based off of this low. But you can see that the channel is being respected, rejected a few times from the midline, finally able to flip the midline, push up, and then we held it as support. And like, you know, the very, very most bullish case for Bitcoin is that we come up to 76%. You know, that would be crazy to see. But I don't personally see that happening. I think there's too many good altcoin projects, but who knows? Maybe the institutions only buy Bitcoin. Maybe there's laws that get passed that Bitcoin's not a security, but everything else is. We just don't know what's going to happen. But Bitcoin dominance is just, look at this. Look at that. That is crazy. Weekly chart. So, okay, let me check the chat. I'm going to try to do a better job of checking the chat, guys. Yes, if you do get anything out of this video, please hit the like button, guys. I'm trying to grow the channel. And thank you, Mark Dutch. I appreciate that. Curtis J, thank you, man. That's a nice comment. I appreciate it. Okay, yeah, I do have my own thumbnail guy. He's a really cool guy. BTC dominance at 99% soon. That would be crazy. That would be crazy. Okay, so let's check Bitcoin. Let's see how Bitcoin is doing, and then we'll go into some of the altcoins. I want to cover Ethereum because Ethereum is looking pretty good. Okay, rejecting from the point of control. We could see another move down here, guys. Just be aware of that. Okay, and let's go into Ethereum. Ethereum. Okay, on Ethereum, let's zoom out to the 4-hour chart. Ethereum has been really, really bullish. So I'm going to talk about, first of all, the macro timeframes and two major pitchforks I'm watching on Ethereum. So Ethereum dropped all the way to the bottom of our macro bearish pitchfork. Let's do the daily chart. This pitchfork was pulled from the prior all-time high down to the last bear market low up to this cycle's highs. And you can see we just kind of chopped through the band, lost the band, came to the midline, you know, just worked our way through the pitchfork all the way to the bottom. We bounced from the bottom of the pitchfork. We were able to, the first time we came up to this resistance band, we did see a nice rejection. We SFP'd our highs into the pitchfork band and saw a drop. Then we were able to break above the band, flip the band to support, which was also a very, very key support resistance flip area that I've been talking about for weeks prior. Look at support, you know, support through here. It was also support back in here, support and resistance back in here, resistance, support, resistance, resistance, support. So that general area, support, support, support. Very, very important area. We were able to flip it to support, flip the band to support, and then we impulse straight through the midline, which is pretty unusual actually. And we continued to the upper band of the pitchfork. We are seeing some resistance where we actually covered this live as it was happening the other day in the Discord stream. We had our naked monthly point of control. Sorry, that's the weekly ones. Naked monthly point of control, where we hit our naked monthly point of control. But also it was, if we look at our golden pocket pull from the cycle highs down to our lows. Now, I understand you guys saying, wait, the golden pocket wasn't hit. If you have a drop of more than 30%, you definitely want to come into that Fibonacci and you want to turn on based off log scale, because we are on log scale as well. And if you have more than 100% pump to the upside, you want to change that to based off log scale. If you have more than the 30% dump, you want to change that based off log scale. Well, guess what? We hit the 0.618 in confluence with our naked monthly point of control, right? In the same exact spot, the 618, the naked monthly point of control, and we rejected that area, and we are rejecting that area so far. Now, I will say this, Ethereum looks pretty dang bullish here, and we could be looking at a couple different Elliott scenarios here. We could be looking at a double 1-2 impulse, which this looks most probable, like a 1, 2, 1, 2, 3 here. Obviously, that's a third wave, huge volume, huge explosion to the upside. Then we could see a 4. Now, if you're going to retrace in a 4, you want to come to the 382 to the 0.5. That's your kind of target area. And then you would see a 4, 5, 4, 5, and we could come all the way to the top of the pitchfork, which is actually a very, very key resistance area around $3,000. Very psychological key resistance and a technical key resistance on the chart. So what I will say about Ethereum is we are hitting the macro golden pocket. We are in our pitchfork band, which is oftentimes you do find resistance or at least some chop within the bands. You tend to chop around within the bands for a bit. And we are due for a pullback. Now, Ethereum is not seeing daily bear divs like Bitcoin is. If we look here, higher highs in the price action, also higher highs in the momentum waves. No bear divs. Even NAMI here. No bear divs on NAMI. Money flow is looking pretty good on NAMI. Money flow looks pretty good on Market Cipher B. On Bitcoin, it's the opposite story. We are seeing those bear divs come in. Now remember, Bitcoin dominance, if Bitcoin dominance starts to break and close dailies below that midline, we could see a rally on altcoins against Bitcoin. So this is one thing that we could be looking at with Ethereum. Now, the other scenario, which is far, far less likely, is 1, 2, 3, 4, 5 with a blow off top on your fifth wave, right? Your fifth wave in crypto, oftentimes you will see that blow off top, especially with altcoins. But to me, it's not nearly as likely. Like this looks far more like a double 1, 2 than a 1, 2, 3. And I do think Ethereum could continue higher. But either way, if this is the end of our third wave, we are expecting, and we are at a more major macro resistance area, we are expecting a bit of a pullback here, at least to that 382 level, to look for a bounce and then a continuation up to new highs and then 4 or 5 up, maybe up to this area. So Ethereum looks pretty good. We did so now that we've hit our major resistance area, and we saw this literally live as it was happening. I think this was on Tuesday, right? Yeah, Tuesday. We were in the Discord stream, in Jason's Discord. A couple things I'm looking at here on Ethereum. So oftentimes towards the end of a third wave, you start to find some exhaustion in the buying pressure, and you start to kind of form this chop that happens. And oftentimes the chop happens in a sort of ascending channel. And you can see we are forming this ascending channel here, holding the channel every time we come down to the bottom of the channel, holding the highs. We did pretty much reject from the highs of the channel when hitting that naked monthly point of control on Tuesday. And earlier today, we came down to the bottom of the channel. We were trying to hold it. We got one deviation below it. And we are starting to lose the support of the channel. So I'm a bit concerned here. What just happened, and I was streaming this in Jason's Discord right before I came live on YouTube, is we lost the channel again, hit into our golden pocket, our local golden pocket, just this golden pocket here from high to low, hit into our local golden pocket. After losing the channel, we came back up and back tested the channel. Now, this is on really low time frames, guys. We came back up and we back tested that channel after bouncing from the golden pocket. Then we rejected and made new lows. So this golden pocket is really trying to hold here, but it's not looking good. We cannot get back up into the channel. So if we don't get back up into the channel soon, we could see that bigger dump to the downside because we are starting to lose our overall trend that has been in since, what was that last, let's see here. The trend that has kind of been in since this high last Friday. So almost for a full week now, we've been trending. If we start to lose this and confirm, we can dump, and we could dump all the way to this 382 down here. Okay, now I forgot to cover the other pitchfork. So let me zoom back out onto the daily chart and let's look at my other Ethereum chart where we can look at this pitchfork. Now this pitchfork is a bullish pitchfork pulled from the lows of the bear market way down here to our cycle highs this cycle to our cycle lows this cycle. Now you can see here on higher time frames, there's not much price action within the pitchfork, but the price action we do have is highly, highly respected, which tells you that this pitchfork is working. You can see we pumped up, we found resistance in this band. It was rejecting us, but every time we would come down to the lower band, we would find support. So we were just chopping within the band, which is often normal in these pitchfork bands. We were able to hold it. We were able to bust up all the way through our anchored VWAP from the all-time high and through our pitchfork midline. And if we look here, we're actually flipping the pitchfork midline and holding it as support right now. So that is a bullish signal. Let me get rid of this daily. That is a bullish signal that Ethereum might want to continue higher. Even if we do drop a little bit to hit that 382, like if we pull this 382 here and we look at this 382 to 0.5, excuse me, we could come down SFP, which is a swing failure pattern, a liquidity grab. We could SFP our lows that we created on Monday into that 382, but close our daily candle, and maybe this is going to happen tomorrow, close our daily candle at or above the pitchfork band, and then we could see that fifth wave continue, seeing this is a 4, a 5, a 4, and a 5 up to our very, very key box of resistance above us. So I would say that overall, Ethereum is looking pretty bullish here. We might see a pullback from where we are at based off that naked monthly point of control and that logarithmic golden pocket. But on the chart here, you can see up in this area between 3,000 really at like 3,100 to like 3,300. Like there is a lot of resistance. Naked weekly point of control, a weekly level. Naked daily point of control, a daily level. We have our top upper pitchfork band up here. You know, there's a lot of resistance up in that area. If I go onto my other Ethereum chart and let's turn on that resistance box, I've been talking about this on my channel quite a bit. We do have this resistance box. Let me turn off the parallel channel. Let me just clean up this chart. Sorry, guys, this looks messy as heck. Let's get rid of this naked monthly for a second. Let's get rid of this golden pocket. Okay, so just above us, which we front ran, I was looking at the top of the band, the top of the bearish pitchfork band. This is a different pitchfork. The top of the bearish pitchfork band, we also have a value area low of our previous range, what I'm calling the upper range, this upper range here. Value area low is up there. We front ran it just barely. And we have, now it's not the top of the pitchfork, it's the band. I meant pitchfork band, but we have a daily in there and a weekly in there as well. And then an SFP of our dead cat bounce high. So you can see this was in February, early February. We had that massive Sunday crash that happened and all the altcoins took a mega drop. Well, after that crash, we had this dead cat corrective move up and then we continued the impulse down. So the liquidity riding right up here on that dead cat impulse bounce, on that dead cat bounce after the big crash, that liquidity resting right above here is very, very key liquidity. So this general area, once again, between like 28, like the weekly's at 28.19, but I would say, you know, 28.55 to 2,900, 3,000. You can see the top of our pitchfork is coming in around that 3,000 to 3,200 area, depending on time. So we are coming up to like some major resistances where I do expect that if this is a double 1-2, we could top out up in that area and see that drop to the downside. Let's see. Let me turn off that guy. So that's kind of what I'm looking at on Ethereum. It is at a major rejection area. We don't have bear divs on the chart. If we do go onto the 4-hour chart, this is a bit concerning for me. As we've been forming this ascending channel on the price action here, starting to see some exhaustion in the buying, we are creating multiple drives of bear divs on the chart. Higher highs, higher highs price action, lower highs in the momentum waves. Now our money flow has looked overall pretty bullish here, but it is starting to come down now. On NAMI, you can see NAMI is giving us some pretty good signals here. Multiple drives of bear div on the chart. Money flow, bear divs on the chart, making lower high humps every time we come down. Now, I will say this, we're printing hidden bull divs now at the bottom of the channel. To me, these hidden bull divs on NAMI really give good indicators. So maybe this channel holds and maybe we come up and actually hit this purple box that we front ran, grabbing the liquidity from Tuesday's highs into our purple box and then seeing a bigger dump. In terms of, yeah, we could be looking for a bigger range to form in this area now at that macro log golden pocket, a type of distribution pattern. We see a tap 1, a tap 2, and then either a model 2 where we create a lower high and a tap 3, or even a model 3 where we create that higher high. And that would be kind of like our double 1-2 impulse. You'd be seeing, you know, your 4, 5, 4, 5, looking at a tap 1, a tap 2, and a tap 3 in a model 1 distribution, and then you dump. Okay, let me check the chat here and see what you guys are all saying. I mean, there's so much leverage built up on the charts, guys, that yeah. Yeah, Coons, what's up, dude? Coons, so nice to see you, man. Hey, guys, I have learned almost everything I know about Elliott Wave trading from Coons. Coons is the man when it comes to Elliott Waves. Love this guy so much. Super respectful person. Just got a good head on his shoulders. Super kind person. Super organized. So, Coons, thank you for joining, man. I really appreciate seeing you here. And I appreciate your teachings on Elliott Waves. They've really helped me in my trading quite a bit. Of course, you can see I'm not technically only an Elliott Wave guy, but I do love Elliott Waves. So, yes. Okay, guys, that is about it for Ethereum. I guess we can cover Solana now. Solana, first off, let's zoom out onto the daily chart on Solana, and I want to talk about a couple things on Solana here. Let's go ahead and look at, where's that pitchfork at? Here we go. No, not that one. Okay, hold on. Yeah, that's right. Maybe I deleted it. Oh, well. Okay, well, we did drop down to a monthly level down here, and it was also a major pitchfork band that we had down in this area. And we did see that bounce from that major pitchfork band. Let me turn off these weeklies. We were able, and then as far as our volume profile goes, Solana has been in this bigger range, this bigger fair value for Solana, trying to discover its fair value since March 2024 highs. We've been chopping around. You can see anytime we come up to the value area high, we see rejections. Anytime we come down to the value area low, we see pumps. We did have that deviation during the Trump meme coin launch. That was kind of a disaster in its own self. The Trump coin caused a lot of impulsive price action on Solana because it was based off the Solana chain. So you had to buy Solana and convert Solana into Trump coin. But we continued this drop to the downside. We hit our key support level. And then what happened here is we were able to break back within our volume profile. We flipped our volume profile to support. Now, many of you guys that were live with me in Jason's Discord, as we were dropping down to this 123 area, I was looking for a swing long here. If we back tested that and flipped that, and I was looking to at least take profit at the 144 POC area, we were able to do that. We flipped it to support, confirmed re-entry back within our fair value, pumped up to the point of control, and then we actually busted through our point of control with a volume imbalance candle. You can see that big buy pressure that came in, busting through that point of control in here. And then over the past couple of weeks, I had this descending channel on the chart here. If you guys watch my prior videos, you can see that we did have definitely really corrective looking price action in this area where we were forming this descending channel, and we were holding every time we came down to the point of control, we were holding it as support. So the last time we came down to this point of control, I was looking for a long here, and I was actually looking to come a little bit lower too to take out these lows. Never did, but I did long this area, and we took it up to our first target was at 161.8, I believe it was. We had a naked daily point of control up there, but we were looking, and we're still looking to come up to this $200 area where we have our macro log golden pocket. We have our previous range value area low. We have our macro range value area high and a daily level up here. So you can see this is our macro log golden pocket here. If you do a golden pocket pull from the all-time high down to the lows that we made, and because it's more than a 30% drop, you're going to change that golden pocket to based off log scale. So you're going to come in here, you're going to just click this fibs based off log scale. And if you look at that, our golden pocket is coming in. Let me get rid of this guy for a second. At our value area high of our macro range, and we have a daily level up there. We have a lot of resistance up here. Now that we have flipped the value area low to support, What's most probable is to continue up to the point of control. Well, once you break the point of control, you flip the point of control to support. What's most likely to continue up to the value area high? So we are finding some resistance up in this area. We are starting to see a little bit of exhaustion in the selling here. And we do keep rejecting from our local pitchfork, which I'll go into in just a second. But overall, I do expect Solana to continue up to this 200 area. Once we get up here, we can look at maybe seeing a bigger correction from this area. Let's zoom in onto the hourly chart. And I've been trading this pitchfork, which has been working really, really nicely. So anytime, and this pitchfork is based off of that last corrective move in this descending channel from the lows off of this major correction here. And then what we've been seeing is anytime we come to the top of this pitchfork, we are rejecting the top of the pitchfork. 3, 4, 5 in here, 6 times we've rejected the top of the pitchfork. Now, until recently, if you guys go watch my YouTube video yesterday, we were talking about anytime we would come down to the band of support, we were holding that band with 1 deviation here of that band, and we were just chopping within that range here, an ascending range, starting to find some exhaustion on the moves. I did say in yesterday's video, if we start to lose this band of support, we could expect to move at least down to the midline or maybe even to the bottom of the pitchfork to backtest this pitchfork and see if the overall trend is going to continue. So you can see yesterday what did happen. We bounced from the bottom of the band, came up and rejected 1, 2, 3 times on lower time frames, the upper part of the band, and then we started losing it. We did get a good bounce the first time we hit into the midline. Got a nice good bounce here, but now we're starting to lose the midline again. And this liquidity here is begging to be taken. So I do think this is our little range that we could be trading, our intraday range. If you're a scalper and you're looking at just trading the range, trade the range until it breaks. So we are below the value area low. With us being below the value area low and that pitchfork midline, I do expect us to at least come down to take out this liquidity. We have also not back tested this anchored VWAP. This anchored VWAP is from the all-time high. So you can see it acted locally as resistance for a little while before breaking it to the upside. And since we have broken our anchored VWAP from the all-time high to the upside, we have not come back to back test it yet. So that is an area that you could see a bounce from. If we bounce from that area and reclaim these lows, only if we reclaim these lows, you could look for a long from this area, taking it up, value area high. Of course, you're going to set your stop below wherever that bounce is. That's a 5-to-1 risk reward ratio, close to it. And then you would also want to pull your golden pocket from the high to the wherever it bounces. And you want to be aware of where that golden pocket is coming in right at that value area high. That would definitely be a TP area, because now that we are going to be breaking market structure bearishly, you could look for a lower high to come in on the charts for a continuation and an impulse down. With this exhaustion that we were seeing, if we look on Market Cipher B here, we were seeing very, very clear signals to look for shorts up here. Lower lows on all the momentum waves, pretty much. Money flow coming out of the asset as we are coming up, grinding up, seeing some exhaustion on the buying here up into this area. Multiple drives of bear div on the chart, which should be giving you signals to look for short positions, to look for shorts at your levels of interest, not before, not in the middle of nowhere, but at your levels of interest. Look for short opportunities, take those shorts with proper risk management, and then look for your support levels as also TP levels on those shorts. So yeah, Solana seeing a bit of a dump here. Actually, is Bitcoin dumping too? Let me check this. Okay, Bitcoin rejecting from that point of control of our little micro range. We still have not come down to this golden pocket yet, and the golden pocket is right around that value area low. So I would like to see us come down there. That was our intraday level. So yesterday in the video, as far as intraday scalp trading goes, we marked out the only resistance as that daily value area high. We did get that rejection from that area. And then our only scalp long level was this area. Yeah, that's kind of what I'm interested in on Bitcoin, but we do need to be aware of that happening. Coons, are you still in here, man? I didn't know if you caught the distribution pattern. I would like to get your thoughts on if you think that 5-wave impulse is in on the daily time frame. This is a pretty unhealthy looking move to me. Did not grab liquidity here. We did not grab liquidity from this range here. We did not grab liquidity from any of this here, but we could see this is a 1, 2, 3, 4, 5. After your 5 wave completes, you could be looking for that bigger dump to the downside. And we are at that macro value area high of our 6-month range, 5-month range. It just makes sense that we could be finishing out, stalling out here and seeing that bigger dump to the downside. And I did cover the possible distribution. So in this range here on the daily, I was looking at this as a distribution pattern, more likely to break down based off of the daily bear divs we were seeing on the chart and money flow leaving the asset as the range was developing. And if we just look at this and take our bars pattern and we look at what is happening here, and we grab this and we shrink this down a bit, and we put it up here and we zoom in on the hourly chart. Let me turn off my channel. Sorry, let me get this organized here. It does look very, very similar to what we are seeing right now on the chart. And what are we going to look for? If this is a distribution pattern in the making, we want to see those same sort of bearish confirmations on our indicator. Well, lower highs on the momentum waves, money flow leaving the asset. We are at the top of a 5th wave, potentially, of a bigger impulse. Remember, on that weekly chart, we were at the top of the 5th wave of our big 1, 2, 3, 4, 5 up here, expecting distribution because it was the end of a 5th wave. So now if we just zoom in on lower time frames and look at the same sort of fractal, we are at potentially the end of a 5th wave, seeing macro resistance come into play and maybe seeing that possible distribution play out as well. Not sure, but that looks like we are starting to see some confirmations for it. And even in this distribution, we took out the highs one more time. So I do think it's possible we could continue up to take out the highs one more time, continue ranging at least through the weekend. We know that weekends kind of see that crappy type price action. One more high, range for a bit, and then get everyone hyper bullish that this is going to happen again and that this is going to happen again. And then we dump it on them. Market Maker 101. Okay, Elliott waves work on higher time frames. No need to catch the high or the low. Yeah, Elliott waves are great, man. Elliott waves are one of the best things to kind of predict price action. Now, as traders, we say we're not trying to predict what happens. We mark out our levels of interest, both to the upside and to the downside, and we let the market come to us. If we see confirmations we're looking for to take the trade, we take the trade with good risk management. When you're taking a trade, you always want to have like a 2 to 3 risk reward ratio. Personally, I like to try to get to 3 to 1 risk reward ratio. You want to have asymmetric reward compared to your risk. And you also want to make sure that you're using proper position size. So you're going to calculate your position size based off of that stop loss percent, this percent right here. And that would give you, generally you trade 1, maybe 2% if you're feeling good of your portfolio per trade. But you're going to want to be managing your risk no matter where you're at, no matter what type of trading you're doing, no matter if it's a $100 account or $1 million account. Your risk management needs to be top priority. And your risk reward, you really only want to be taking the highest probable trades. So that is kind of what I'm looking at there. Okay, I know a couple people recommended some altcoins. Let's see, there was Rune. Yeah. Yeah. Coons, thank you for coming in. I wanted to get your take on that daily impulse to the upside. Do you think it's done? Do you think this is it? 1, 2, 3, 4, 5 into the value area high, into the 886, and then we see that bigger dump. What I would say, Coons, I know that if we hit the 886, we do have a higher probability to eventually come take out the highs from that Fibonacci pull. But I will say this, in our most historic daily range prior, this range down here, it didn't happen multiple times. You know, if we look at that, 886, let me change that to yellow. 886 touch, rejected, made new lows first. Then if we look at that same larger pull, 886, rejected, made new lows. 2 times already in the range, in the bigger range. Now, new highs to new lows. 886, rejected, made new lows. So in macro rangy type price action, Bitcoin does seem to want to reject those 886s. Cool. Yep. I get it's probably late where he's at, huh? In Europe. Okay. So let's cover Rune real quick. Let's see. Is this the one I do it on? Yeah. Okay. Let's get rid of some of this lower stuff. So Rune is coming up to a pretty key area of resistance. It's the pitchfork midline in confluence with that daily, and we have that order block in there, and we're seeing a rejection from that daily order block and the midline. But you can see here, Rune was forming this accumulation range in here. We had some massive dumpage to the downside. Looks like maybe a distribution pattern right up in here. Whether you want to call that a retail head and shoulders or a Model 2 distribution pattern. We had distribution dump down, had our lower high come in, our macro lower high come in, and then we continued the move down. So Rune looking respecting the TA very well. But if we look at this pitchfork pulled on Rune, this more macro pitchfork pulled on Rune, we dumped pretty much all the way to the bottom of our pitchfork. We held around the bottom and we started forming an accumulation range at the bottom of the pitchfork. Now that this accumulation range has had some time for the whales to come in here and buy up, buy up, buy up, buy up, expansion. We're starting to see expansion here. So this expansion can come a lot higher, by the way. But if this is on Rune going to be, like this could be a 1, 2, 3. Now, the bearish scenario is that this is an ABC and that we're just going to roll right back over here. Actually, let's go ahead and look at our Fibonacci targets for that. Let's go from the lows to the highs to the lows. Okay, we broke our 1.236. So generally, you want to reject from the 1-to-1 to the 1.236. Now, we have not hit the 1.618 yet. And that 1.618 is generally a third wave target. And it can go higher than the 1.618, but that's generally your third wave target. So if this is going to be a 1, 2, 3, 4, maybe flipping that midline and then seeing a 5, maybe up to this daily level right up here, or, even coming up to the band. But Rune looks pretty bullish overall. This was a very, very good sign. Accumulation range at the bottom of a macro pitchfork support level. Look at what we were seeing on the charts here. Lower lows in the price action. Now, yeah, I get that that wick is not lower than that wick, but overall, lower lows, higher lows here, money flow coming to the upside here. As far as NAMI goes, we did see our bull divs here, and we did see hidden bull divs on the daily time frame coming to back test that band. Actually, let me clean this up first so you guys can see that. So you can see here, as we made our final low, grabbing liquidity, pushing up here, you can see we rejected from the top of the band. We came down to the lower band, held it as support, hidden bull divs on the daily, and pushed. And actually, that we had marked out as a box of support. So let's zoom in here because it's been a while since I've covered Rune, and we were looking at it locally last time for the person who asked about it. We bounced right pretty much from that box of support, which was in alignment with the bottom of the band. Bounced from that area, and now we're continuing here. I actually think that Rune could continue up to this general area, at least a little bit higher up here, maybe even to that 1.618, but let's see here. We are seeing bear divs on the chart here, and then even, yeah, just locally, bear divs on NAMI here. Money flows coming out pretty aggressively here. I would look at, if you're looking at Rune, trade the range until it breaks. We're in this little micro range here. Okay, at value area low, but not seeing much strength. Let's zoom in onto the 15-minute chart. And let me pull this to like right here. Okay, I mean, we were seeing bull divs here, lower lows, higher lows. Money flow was coming up, but we are now that 15-minute bull div kind of played out, and now we're dropping again. So I would look to take out these lows of this range. Let's see. Here, oh, we did take out those lows. Okay. So looks like if we don't hold the high, now that we took the liquidity of the lows of the range, right? We just had a very clean swing failure pattern of the lows of the range. Now that we've grabbed that liquidity, what we want to be seeing is an impulse to the upside. So this does look like it could be a wave one. Let's look at this. This looks like it could be a wave two here because look at this. 3-wave corrective move. We want to see it come down to the golden pocket. So let's measure our golden pocket. I know that's not right. Okay, golden pocket 786. You really don't want to break the 786. So we are in that general zone. So if Rune is going to bounce and continue higher, it has to be kind of now. You know, maybe a little bit lower down to 186, but it has to be now. If this is a smaller 1, 2, 3, 4, 5, you know, you have to do this now, like in this general area. But Rune, and then if it doesn't do that now, I do think Rune could start to dump out of this range. Like we've already taken the liquidity of the range. So if that liquidity grab is not going to bounce us up to the highs of the range or to continue up higher, then we probably are going to drop a bit more. So let's actually zoom out onto the weekly. Oh, what is that? Oh, that's our M2 money supply. Let me get rid of that guy. Okay, let's go ahead and that's a weekly level that we could be interested in. Wow, there's nothing too much here. That's crazy. Yeah, I mean, there's a lot of imbalance in here that we could sweep, but okay, we got that daily marked out. Yeah, there's not, okay, if we do not hold this range, there's nothing really in here. Look at all these fair value gaps in here. Big fair value gap in this candle here. If we start filling it, we could drop down really quickly. And I would say we could even drop down to back test the value area high of this prior range. So if we take this accumulation range here and we look at that value area high, we could probably drop all the way down there. Let's take our golden pocket of the entire move up. Yeah, golden pocket value area high is going to be that general area of support. You could drop all the way down to about 140. And you know, if this is going to be the bearish ABC, even though we kind of wicked a bit past that 1.236, you are at that major resistance being the pitchfork midline. If you reject the midline, you do expect to move down to the band again, to backtest the band again. Since breaking the band on higher time frames, we have not backtested it. And in a healthy market, oftentimes you will come back down to backtest it. But look at this. Was finding resistance here, found support on the lower part of the band. We broke above it. We have not come back down to backtest it. So unfortunately, Rune could dump pretty hard here. You might, from filling this fair value gap. So let me just turn those on for you guys so you can see that. You can see all these fair value gaps in here. Major fair value gap, major fair value gap, major fair value gap. If we start to come within these, this could be a flood. Like we could literally just fill this so quickly. So be aware of that. There's not much in here as far as structure goes to hold us up. It does look like we are seeing very slight bear divs on the daily as well. Coming on Rune. What I would personally like to see on Rune is to come up just a bit higher, maybe even hitting that daily above us. I know we're in that daily order block here. We're within that order block. But what I would like to see is come up just a bit higher to actually hit the midline and maybe even hit the daily and then wick down below and start closing down below. This could be a good short opportunity up here. Okay, I only have about 10 minutes left, guys. So let's just check out Bitcoin real quick here. It's actually not looking too bad. Like we're holding our little area of We're holding the value area low here. Let's look at ETH. I wanted to see if ETH was going to hold that golden pocket. ETH is holding that golden pocket. Wow. Now what we need to see on Ethereum is to get back within this channel. Where is that channel? This channel. If we can get back within here, that's pretty much where the VWAP would be. We're going to push up. But if we do something like this, come up here, reject from that VWAP and back test to the channel again, we're at least going to come take out these lows. Maybe even taking out these guys down here. So like I say on these channels, guys, when you have an ascending channel or a trend, like a channel trend like we're seeing now, oftentimes when you break it to the downside, you will very, very often at least sweep the liquidity of the second pivot of the channel. But even a majority of the times you can sweep the liquidity of the entire channel. So taking out these lows down here at 2270-ish. Yeah. All right. And let's check Solana and see what is going on with Solana. Solana is going to reclaim this midline. If we reclaim the midline and the value area low, that would actually be really nice. Now, we did not grab this liquidity, which is a bit concerning because we got so close to it. Anytime you get this close to an SFP and you don't reclaim it, it's a bad sign because then you could bust through it next time without no real reaction. But what we're seeing now, this midline is trying to hold with some deviations like we were seeing on the band here, just some deviations below it, but overall holding. So if this midline can hold, if we can get back above this value area low, you could even look for a long reclaiming the value area low, stop below that low. You could be targeting the value area high. That's still a 3.5 risk to reward ratio. I mean, that's pretty nice to me. We did confirm. No, we didn't. Never mind. Let's look at our hourly. Ooh, yeah. Okay, so we have possible bull divs on the hourly. You can see here lower lows in the price action and potential higher lows here, but your money flow is still kind of coming out, and I don't like the way it looks. I would personally like to continue down just a bit more to take out these lows and maybe hit that anchor VWAP. That anchor VWAP is at 164.2-ish. Okay, guys, if you got anything out of the video today, please hit the like button. Please subscribe to the channel. Once again, those affiliate links for the partners of the channel are in the link, the description. So BYDFI is a non-KYC and non-VPN exchange. They are giving up to 15% cash back on your initial deposit, and you can get up to $1,000 total cash back. They're also giving discounts on trading fees, a 17% discount for VIP1, which is still a great discount, and then more depending on how much you deposit. And they also are giving up to $8,100 in futures trading bonuses, depending on how much futures trading you do. And then MEXC is the second sponsor of the channel. They are doing 10% cash back on your initial deposit and up to $20,000 in future trading bonuses, depending on how much volume you move. So thank you guys for tuning in. I appreciate it. Looks like we are going to continue the range. I expect us to continue to range here. I just wanted to point out those warning signals for you guys. We could see distribution from this area. Now, overall, Bitcoin has not shown any real weakness on the charts, but our first sign of some weakness was the breaking of these lows here. You know, bearish market structure, and then we came up and created a lower high. So I understand that we're not really breaking this range down, but we do have some signs as far as our indicator goes and some signs as far as market structure goes to continue this move to the downside. Yep, that's about it. Our total chart, our total two chart. Did I cover this today? I don't know if I did cover this. Let me cover this chart here. So this is the total three chart. This chart is all the altcoins except for Ethereum and Bitcoin, just pretty much all the altcoins. And we did come down. So first of all, back in December, when I was telling everyone that I was taking profits on my alts, I got so much shit because people said you're taking profits before the largest alt season ever. And we were coming up to the top of the pitchfork with confirmed bear divs and confirmed money flow, leaving the assets. leaving this total 3 chart. And I took some profits up here. I only took like 30% profits. I wish I would have took more. But even back then in December, I did say, guys, we could drop to the midline. And if we lose the midline, we could drop to the bottom of the pitchfork. We did. Over the next few months, we worked our way through the pitchfork and dropped to the bottom. We hit the bottom of the pitchfork on the total 3 chart with bull divs on the daily, money flow coming up on the daily. And you can see we've had a very clean 5-wave impulse here. 1, 2, actually this could, yeah, this is the crazy part. This could be a double 1, 2, 1, 2, 1, 2, 3. We could see a 4, 5, 4, 5, which would make sense because we haven't made it up to our golden pocket yet. So we don't want to see this impulse ending before we make it up to that golden pocket. But you can see here, the first time we hit into the band, let me fix this. The first time we hit into the band, we rejected it down right here, made a higher low. Then we came to the upper part of the band. And you can see for many days, that band was holding us down. We were trying to wick above it, trying to wick above it. It was holding us down. We bounced once from the bottom part of the band, bounced the second time from the bottom part of the band, and finally we're able to push through the band. And so I do think that overall on more macro timeframes, we could see the altcoins continue to rally up to this log golden pocket or up to the pitchfork midline. And then we could see major corrections from there, back down to the band. Total 2 chart, very, very similar. We did see the completion of our 5-wave impulse. We could be expecting a bigger correction after a multi-year 5-wave impulse. Let's go zoom out to the 3-day chart. We were ranging in this lower accumulation range for quite a bit. Accumulation, expansion. And now we could be forming something like a bigger distribution pattern where you see that left shoulder, right shoulder, head come in, or it could be, I don't think in terms so much of head and shoulders. I think in terms of distribution, you got your tap 1, your tap 2, your tap 3, and a model 2. And then you could dump back down. And then as far as Elliott waves go, you have your 1, 2, 3, 4, 5 waves. You could see your ABC. But I do expect a little bit higher still. And then we could continue impulsing up after that. I would like to backtest what used to be our highs of this accumulation range. Backtest those highs, flip them to support, continue pushing. Okay, guys, that is about it. I have to get going. I've been streaming for 3 hours now, 2 hours here and an hour on the other stream, or vice versa. I can't remember, but I've got some things to do, so I got to get going. Trade safe, everybody. Make sure you are using proper risk management. Make sure you are using stop losses, and I will see you on the next one.